All right, everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to state some things. And the first thing is welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. Hope you guys find this video helpful and informative. And to all my subscribers, welcome back, and let's jump into this chart. So Apple Inc. is honestly in a upward trend if we look at it, but there's been a lot of volatility and it's not breaking through newer highs. So it has risen from 103, and obviously at this dip it fell again to 104, almost 105, and it had started to rise to newer highs, reach 118, and it's dipped from there, and it's been struggling to stay above the 50-day moving average, and the bears have reappeared and we're down to 112.95. Now the question is, will this recovery continue to work its way up even though there's been a lot of volatility and reach newer highs? Obviously, also Apple has just announced one of their best dates of holding a seminar, as they call them, or hosting, their event where they're launching all the new products and their innovations, and they're going to talk about iPhone 12, probably the whole 5G stuff. I mean, there's a lot of great things happening that's going to happen soon in October, but this is just a slow recovery here from 103 to 118, and it's actually dipped from 118 instead of continuing the momentum. A lot of profit taking, fear, uncertainty have kicked in here, and we're definitely seeing it with these high jumps and then high falls. And the question is it just going to continue a sideways movement, or is this momentum going to continue? Because it has risen up from 103, but it's actually now on its way back down after that slight recovery. Now, as I've stated to all investors previously, 138 is one of the most important numbers for this stock to be crossed by the bulls, and the most important number to keep a close eye on is 103.40, 103.30, 103.50, because if that gets crossed, this could be on its way to newer lows. So let's zoom in here and see what's important for tomorrow. So support was broken through, there was a slight recovery, and then quickly it fell to newer lows. So let's see what the charts are showing us, and we're going to look at our lowest point recently and the highest point before the fall. And it's a very broad one here that we got going on. So let's zoom this in as much as possible so we can see what is important for tomorrow. So here we are with our support, and here is our resistance. So the 50-day moving average, super important. 50-day moving average is 114.54. If that gets crossed, we're back in bullish territory and we'll get out of this bearish territory. But right now, we are in bearish territory. The tug of war is going to be interesting, but the bears have already taken this one down $2 away from the 50-day moving average, almost $2 away. That right there is alarming, showing that the bears are starting to gain control. So one of the most important things here is the support. Our support level is 112.24. I pay very close attention to how this stock is reacting, because at 112.24, if it crosses it, I'd pay very close attention to the behavior and how quickly is it moving to newer lows, or is it trying to recover and the bulls are trying to come back up. Now, if the bulls come back up, they need to come in hefty and strong to cross the 50-day moving average, because the 50-day moving average is way up here at 114.54, and that's the most important number for the bulls to cross. Now, just bringing a recovery, that's great, leveling off, stopping it from hitting newer lows, but if the bulls come back up, they need to come in strong and get as close as possible to the 50-day moving average to build momentum for the next coming days. But if the bear, well, at the end of this video, that pop-up video, I actually go into deeper detail about the S&P 500 index, and I just want to break it down a little bit to you guys and see what it is that I want you guys to watch. I know I've been saying it in my last couple of videos. Check out the video, and you're like, well, what does that do for me? I'm just looking for the ticker symbol. I want to see the analysis and so forth. Well, this right here is great news for us as investors right now, present day. I know that the Federal Reserve pumps have an effect. A lot of analysis say that, and experts in the future. But right now, in the present, how can you continue to maximize profits? Well, it's been awesome to see the S&P 500 rise the way it has in such a great recovery due to the fact of these pumps. I'm not sure if that trickle effect is already starting to show that these pumps have had an effect where it can actually start going in the other direction, or if this is just due to the fact of the time of the year, people taking profits, the uncertainty that's coming up, or fear, or so forth, right? So that is something that I am already seeing how quickly this is actually fallen. But you can see as it's been falling down that these pumps still have an effect on the market by bringing it up several points. And we're going to go into that in just a moment into detail. But this has been rising up, and it was a great run. It hit highs, and from this point forward, it actually started to fall and it became more turbulent. The volatility has always been there, but these pumps were actually supporting the market on rising up. But we're going to look at the pumps now because this is the state that we're in. We're not in that bullish run anymore. So I'm going to pull this up. These are some of the most recent pumps. This was released right back on the 14th of September, and the next release date is October 14th. So the first one was on the 15th, and we're going to look at that in just a second. The second one was on the 22nd. The third one was on the 29th, and the most recent and upcoming one to be the recent one is 10/6, October 6th. So we're going to look at those dates. So the 15th, this was September 14th. It slightly dipped and it ended off around 33.83, and the next day was the 15th and it rose up to 34.18. That right there is a rise of several points for the S&P 500 index. And again, 21st rising up, and we land on the 22nd. So the day pretty much ended and started here at 32.61, and the end of the run, because then comes the 23rd, the end of the run on the 22nd, which was the date of the next pump, it reached up to 33.21. So again, rose up several points. Now the anticipation here for the next pump and the week that was coming, the end of the week started really strong, started the week strong on Monday, and it started to dip on that Tuesday of the date of the pump. Well, guess what? The pump actually saved it from hitting newer lows and actually created momentum to continue to rise up because it hit 32.28, and before the day ended, it rose up to 33.49. This is actually one of the pumps that I've seen the pump do the least effect in rising it by several points, but I have seen the pump do this before, stop it from going in this direction and rising it back up, creating an attractiveness to the market to bring in obviously more investors and obviously do this effect to bring it up. And then obviously the volatility of the market is normal to be seen like that. So we're anticipating the next one, but what I want to talk about is what does it mean for us as investors that these points of the index are rising up? Well, if the index of the S&P 500 is rising up several points, that means that it is rising up and there's 500 ticker symbols within it. Some of them, not all of them, are rising up with it. So individual ticker symbols are rising anywhere from 30 cents to up to $3, maybe even more. But I have seen ticker symbols rise on the dates of these rises and these points rising on the index. Individual ticker symbols rise 30 cents to $3 per share. I know that doesn't sound like a lot. It sounds like, oh, well, it's 30 cents. Oh, it's $3. I know it sounds small, but per share, it does add up. And I'm not saying that it guarantees you profits, but profits are profits. And I always say that in all of my videos, especially when I'm talking about this. And this is an opportunity to maximize profits and minimize your losses. I'm just encouraging you guys to check out the video. I go into more detail about it. I just wanted you guys to see with your own eyes the dates of the pumps and what it has done. And if we go back to previously reaching these highs and dipping, this pump of the scheduled dates was rising this up in an upward direction. I mean, here are some notes, and I also had notes here, but I deleted it because I didn't want those notes to go ahead and confuse people in the upcoming pump dates of over here. But something that I find interesting is, yes, On the dates of these pumps, the market was rising up to newer highs, reaching newer levels, and going up to the point that it hit these highs. But on the way down, on the dates that the market is rising several points, I mean, you do see it several times before, okay? That's good. But on the dates of the pumps, it's actually rising. It's actually rising. It's actually leveling off, rising, creating momentum to go to the next level. And it actually rose due to the fact of the anticipation of people knowing that there was probably an upcoming pump. So many investors know about this. A lot of people aren't speaking about it, or they're unaware of it. So I'm here to share with you guys that there's an opportunity to maximize profits and minimize losses. Click on the video, check it out. I go into more detail about it. I hope you find it helpful and informative. And thank you guys so much for watching, and let's make some money.